Hello and a wonderful good morning, everyone out there at XM Live Education here in our advanced room, and a special welcome as well today to our YouTube viewers. Good morning, everyone, and welcome here at XM Live Education. This is the seasonality session. We are talking here about seasonal trading. My name is Frank, and I'm really happy to get you a little bit into the world of seasonal trading because it's an interesting one. It's an approach that maybe not every trader is choosing, and you can really nicely combine it with technical analysis because seasonality in this point gives us a possibility to detect markets that might be setting up in the specific time we want to trade into a certain direction. So you have more or less like a bias. You can create yourself a bias by that. So if you know, for example, that in the majority of the times, the euro, US dollar, or the euro itself, yeah, so here you see in the matrix always against the dollar. So euro against US dollar, you see, for example, in the August, has a tendency to go short, so that we are seeing like kind of a dollar strength happening in this time of the year. Then it could be already giving you an idea, okay, I would like to rather look here for dollar strengths. And this you also can recognize here on dollar index. Dollar index, we have to be a little bit be careful because it's set together by many currencies, and the dominant currency in the basket is the euro. So it could also be influenced by that. But if you look at all the other currencies, they're indicating definitely that there might be a tendency in August that the capital is rather looking or searching the direction to go into the safe harbor assets. US dollar, Japanese yen, Swiss franc, for example, is a very interesting combination. If we are going down to the commodities, we see also like long situations in gold and silver, at least from a seasonality perspective, which indicates as well that the stock markets in this time of the year might getting into a little bit of a troubles. So we are seeing, for example, German DAX is going to be rather having problems. S&P neutral, but still long. We have as well in August the Nasdaq. So that's the only thing that is a little bit not fitting in that picture at this very moment. But it's like a very good like overview that you can get if you are working with seasonalities, that you have a feeling about how the markets might move. I say it in conditional might, or they could move, because nothing is for sure in the financial markets, as probably all of you are very well knowing. And this is why it is a very great first possibility to look into this. So let's talk a little bit about what is playing into seasonalities. In seasonalities, it is like it's really like as we are having it as well in the world, right? In the world out there, that we are like, for example, having spring, we are having summer, we are having autumn, we are having winter in many parts of the world. And you have different kind of stages. The winter feels different in Europe than it feels, for example, in Singapore, right? Or in other countries. Yeah. So and but anyway, you might have a season, while the season is much more like has much more amplitude in Europe than, for example, it has in Singapore, which is close to the equator, right? And this kind of things you have to take into consideration. The same is it here. So maybe when we are talking about currency, we see much more like a much more realistic fitting seasonality in a commodity area. So if we are talking about cacao, for example, or if we're talking about wheat, or if we're talking about the agricultural products in general, there is like more seasonality than, for example, in currencies, right? Why is that? Because on a seasonality, of course, the weather plays a big role, especially in the agricultural markets. When we're looking, for example, where a seasonality didn't work out at all, for example, was this year in cacao. Cacao usually, according to the seasonality, should have been weaker months in May, June, and July. But if we are looking, for example, into the cacao chart, let's find it here. We have it as well here in the platform. It's the cacao chart here. Then you might recognize that we had been really in an incredible in an incredible uptrend throughout the whole year, actually, right? And why was that? Because we had weather conditions extreme. We had hotter, like, you know, a weather condition that was not in favor of cacao. So that means the harvest was affected. And this is the reason why here the weather seasonality played a role, the weather extremity played a role. And this is why we had here like less supply than demand. And this is why we had been here growing now extensively to the upside. That we see here now at one point of time, a price correction is pretty normal because, of course, like we had extreme positionings. The price is going up, and if the problem is resolved, if it's like not as much as expected, of course we suddenly see as well like a repositioning of the markets, and the markets is turning. But here, for example, you see that seasonal is not a 100% thing, but it could be, of course, as well, giving us like a very good information about what could what could be. So, and I see there's also already a question coming in. What is the view on gold? Okay, let's go into gold. And the question comes here from Samir. Samir, a very warm welcome to you here at XM Live as well. And this is a question from YouTube. So YouTube viewers, you can anytime put your questions. I get them here live, submit into my chat window, and I will be looking into this. So let's look at gold. Let's start from a seasonality perspective. I mentioned already, gold is actually a long candidate in July and in August. So, but what does it mean? Is it really happening? At the moment, the price looks not as good as I would maybe have wished for gold, but it started really great, honestly speaking. Yeah, so let's get again into the Heikin Ashi view, because I think it's really like nicely bringing us a very nice view of a trend, for example. And you see that in July, the seasonality worked out really wonderfully. And now even I have to say gold is for me setting up at the moment really beautifully. You might remember, or you might know that tomorrow, for example, we are having a reporting of the CPI data. And this could be a factor for gold, that gold is again going in the other direction. I could also drop further. It depends a little bit as well on the dependency on the dollar. So what the dollar is doing. So let's play the situation through. So seasonality plays in our favor for a gold trade into the long direction. The price at the moment is not confirming that. So I'm keeping my fingers still. I don't do anything at this very moment. But what could happen tomorrow is that with the inflation data, they're going to be reported, that we get an impulse on the gold market that could support the long direction. And in that case, it supports our seasonality as well. If you are looking what could happen is the CPI, it's inflation, it's the price increase rate. And in the United States, we were dropping here like significantly already. So we are going again towards the goal, the overall CPI. We have a little bit of problem with the core CPI. This is still relatively high and would need a release as well. And if this release would come, we might see a weakening dollar. Yeah, we might see, a strengthening dollar, because in this very moment, it could really be that the Federal Reserve is going ahead and saying, okay, hey, we're getting towards our target. Our measures are taking care, are playing right now really out. And by this, we can stop to go the way of increasing the interest rates. Yeah, we are getting closer. It works nicely. And then we could see that the interest rate plateaued, the interest rate pivot, at least the top building. If they are decreasing is a completely different question, but at least it could play into the cards of the thinking that no, there is no further interest rate hike anymore. And this again could play into the cards of gold by as well having a cheaper dollar, and then gold accelerating a lot, stock markets accelerating quite a bit, and then by this confirming ourselves the seasonality on gold. And if we are thinking this to happen, I could imagine if we are seeing a symmetric behavior of the market, and you see kind of a symmetry as well when we are looking about the cycle movements here. right? So this move here to the downside was approximately had a length of around 16 days. And here, when we are looking at about this cycle right now, then we are seeing as well that we are already dropping in a similar length as we dropped in the previous in June. And this could lead or could also, from a symmetry perspective, speak to it that we are close to a turning point in gold again as well. And with the impulse of the fundamental data, it could really help us to bring again the gold price higher. So what I would be waiting for right now, actually, if this hypothesis, what I just created, actually, if this hypothesis, what I just created, if it's really coming true, right? If it's really like coming, if it's happening, because of course, when I have a scenario that I outlined right now is actually happening, it also could happen exactly the opposite, honestly speaking, right? So it could also happen that the inflation rate is suddenly going higher again, that we see again increasing or accelerating the price increase. I mean, we are always having like a price increase rate every month, right? I mean, it's never going down the prices, but the speed is important. And if we have again accelerating the inflation rate, exactly the opposite could happen. Yeah. So what I want to say by this is, if we are having this happening, the interpretation of the market could be like that Jerome Powell and the Fed are going to say, well, maybe we are not tough enough with the interest rate hikes and we are hiking further. And this could lead to exactly the opposite, so that we have an incredibly strengthening dollar, might be. So that dollar really getting strong. That gold on the same time might be dropping further, that we are really getting still lower in the gold market. And well, at the end as well, having then a further retracement on the stock markets. Yeah, so everything is possible always, unfortunately. Yeah, so it's what means unfortunately, it could be fortunate and unfortunate. But at the end of the day, what we can say as a seasonal trader, for example, is okay, if the cards are playing in our direction of a long situation, then I'm investing myself. And if it's the opposite, I keep my fingers shut. I'm waiting further for my chance, right? And then at the end of the day, and this is what I would like to outline to you as well, is if a seasonality plays out and you have here the opportunity to go into such a trade, you are making money at the end of the day, right? So because if you have done the analysis, or if you have copied here the metrics, what I'm showing you every week here on the seasonal session, and you have copied out yourself here, for example, that a gold market in July and August is going long, then you skip all the short opportunities, right? Because you have the idea of going long, and why you should mess up with your ideas if you think about to go long, and then suddenly in the beginning of July you see here, like, and this is what Heikki Nashi is really excellent for. You see the trend behavior changing quite a bit, yeah, and you see, okay, it's changing here. Maybe you go in for a first long position, which the first one you might get out here of this trade, or you at least like put your stop loss then underneath the low of the red candle here. And then you say, okay, wow, but it's going further, and bam, 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 you're making money. I mean, imagine you would have traded like this, right? You go in here, for example. I'm not sure if this was the close price. Let me check it. This always you have to check with the Heikki Nashi, because it's a kind of an average price. So 1919 we were buying in this case, 1919. Our stop loss goes here below, $30 of a risk. Yeah. So then we move our stop loss here the first moment. Yeah. So we are reducing our risk already by $11 for the trade. And then we are waiting until we get here in another X candle and get here out with a $34 of win. Yeah. It's from a risk reward, a little bit more, than one on one, but you're definitely making money here. And that's the good part of it. And if you are even like able to still move into such a direction, um, that you add positions, then you can really make here a nice money. I tried to add, I made a break even trade on this one, but definitely if you don't add position, you work just with your stop loss, then you have here a very possible, yeah, situation to make money on that one. This is my view on gold. So if the impulse is coming tomorrow, I think we have a good chance to get into a growing gold market, growing silver market. It looks pretty similar on silver, maybe even a little bit more attractive on silver from the percentage movement. But that was it.